warahmatullahi wabarakatuh. My name is Siti Sarah binti Jamaluddin, 049891. We are from Group 2. The sector that we choose is transportation and logistics. So I will explain a little bit about company that we choose for the first two company, which is GD Express Carrier Berhad or known as GDET and Post Malaysia Berhad. Based on the share price, overall we can see that main factors that determine whether a share price move up or down by supply and demand. Supply and demand affects the appeal and ultimately the price of shares, while it might appear that there are other factors at play, such as the health of company and company earnings. These are really just drivers of supply and demand. This means even we think a stock is over or undervalued, the market decide what it's worth. It's all about the dynamic between buyer and sellers. If more buyers move into the market, the demand grows and share price go up, especially if there is limited supply. If supply and demand are just about equal, the share price is likely to move around in a narrow range for a while until one of the factors outweighs the other. Next, in terms of the risk in GDET, in the current environment of extremely tough competition exacerbated by global trade uncertainty, it has become increasingly difficult for companies to sustain profitable operations, let alone maintain their growth trajectories. The express delivery industry is faced with many challenges. These include excess capacity caused by the entry of many new well-founded players, cutthroat competition, technology change giving rise to obsolescence, rapid involvement of e-commerce, and changing consumer tastes that threaten its viability. With all the above challenges, it is imperative that GDET involve a corporate sustainability plan that will ensure its viability and growth for years to come. It has to come with the right strategy to produce the correct product mix, put in the necessary processes and infrastructure, and train a dedicated and skilled workforce while ensuring external factors continue to work in its favour. While in terms of risk in post-Malaysia Berhad, the global economy is projected to register negative growth in 2020, due mainly to the significant economic repercussions arising from the unprecedented coronavirus disease COVID-19 pandemic. Measures implemented to contain the rapid spread of COVID-19, including broad-based travel restriction, enforced business closures, and restriction on social activities, will suppress private sector's activity globally. Nonetheless, the unprecedented nature and scale of fiscal and monetary policy intervention across economies is expected to cushion the economic disruptions caused by COVID-19. These measures will support a gradual normalization in economic activities upon the successful containment of the pandemic. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Izzati Azrin binti Abdul Aziz. My matric number 049955. The company that I choose is Airport Holding Berhad and Freight Management Holding Berhad. Malaysian Airport Holding Berhad opened in 1998. KL International Airport is one of the region's major aviation hubs, located on the west coast of Peninsula Malaysia bordering the state of Selangor and Negeri Sembilan. The airport is approximately 50 km away from Malaysian capital city Kuala Lumpur. A good network of highway and expressway links KLA to the rest of Peninsula Malaysia. Malaysian Airport is responsible for the operational safety and security management maintenance of the airports. The services and facilities provided are divided into two main sectors, known as the land side and the air side. Malaysian Airport works with the key agencies such as the Civil Aviation Authority of Malaysia (CAAM) to ensure the safety and security of airport operation, particularly at the air side through regulation, oversight, and monitoring of the technical and safety standards. The air traffic control under CAM coordinates aircraft navigation and is responsible for the safe movement of aircraft, including takeoff, landings, and taxiing. In ensuring effective and efficient management at the airport, Malaysia Airport collaborates with a range of partners For instance, government agencies such as the Immigration Department of Malaysia, Royal Malaysia Customs Department, as well as private entities such as airlines and ground handlers. Malaysian Airport works closely with these parties in key areas at checkpoints such as check-in, immigration, custom checks, and baggage and ground handling. In addressing the COVID-19 pandemic, Malaysian Airport have given full support to the Ministry of Health (MOH) in implementing health and safety measures at the airport. These include the placement of thermal scanner at the airport and physical distancing markers, as well as the implementation of COVID-19 screening by MOH personnel for all passengers at the departing and arriving touchpoint at the airport. This is the share price of the company from January to April. If you look at the share price graph, you can see that they are increasing and decreasing. From January, the line shows a decrease in the share price. This is due to limited demand for air travel, causing the share price to drop. From February to April, the share price went up, showing the demand and supply of Malaysian Airport Holding Berhad increase. This is because we expect the launch of the vaccine program in Malaysia to be positive for MAHB passengers, as confidence in travel gradually increases. The risk analysis for Malaysian Airport Holding Berhad, they took a serious view of the escalation of both the spread of COVID-19 as well as its impact on the aviation industry, and immediately initiated steps to mitigate the effect on the group. In a crisis, it is always important to have clarity about the threats they are facing. Through extensive stress testing and scenario planning, it soon emerged that the main threat posed to Malaysian airports was that of cash flow and liquidity as their primary source of revenue. The aeronautical business would face severe pressure as travel restriction disrupted the aviation industry globally. The second company is Freight Management Holding Berhad. It is established in 1988. FM Global Group of Companies is a leading international freight services provider based in Malaysia, offering multimodal freight services that include sea, land, air and tug and barge. It differentiates itself from competitors by offering its own operated freight services, thereby minimizing outsourcing. This enables the group to offer dedicated and reliable freight services to its diverse range of customers with a workforce of 1,000 personnel who are stationed at all the important maritime and air gateways of Malaysia and also in Asian region, India, Australia, the Middle East, and the United States of America. Freight Management Holding Berhad was first listed on Bursa Malaysia in February 2005 and was successfully transferred to the main board in December 2007, making it one of the first Malaysian on-freight services companies to be listed on the main board of Bursa Malaysia. Services offered by the group are international and domestic sea air freight services, 3PL warehousing and distribution, bulk services, custom clearance, land transportation, project management, and last mile delivery. This is the share price of the company from January to April. The data from the Freight Management Holding Berhad shows that the share price of the company from the month of January to February, the share price show an increasing price. This is due to the demand for freight services, disposal of its loss-making businesses, and better economics of scale. From the end month of February to the end month of March, the share price went down. This is because the pandemic led to lockdowns and border closure, which caused supply chain disruption and restricted movement of goods. In April, it showed a steep rise in its share price, which reached a record high. This is mainly due to an increased business activities in international freight and domestic logistics. The risk analysis for fund management holding Berhad, the COVID-19 global pandemic and subsequent economic fallout have illustrated the severe impact that external risks can have on economic business activities, including the freight and logistics sector. The COVID-19 continues to impact many economies worldwide. The pandemic led to lockdowns and border closure, which caused supply chain disruption and restricted movement of goods. Additional measures to ensure workers' safety resulted in increased operating costs, which included ensuring physical distancing at all premises, disinfecting workspace, and providing personal protective gear to workers. In spite of these efforts, there is no guarantee against outbreak that they have to continue advising and reminding their employees about taking precaution and adhering to the SOPs all the time. To increase their effectiveness, to maximize their profit, the group conducts periodic reviews of investment budget and key performance indicators related to profitability. They also monitor the implementation of budget for capital expenditure as well as operational expenses on a monthly basis. In addition, they constantly benchmark against reliable and reasonable profitability indicators while also reviewing actual achievement against their forecast in the same time frame. Risk in investing in the sector today is quite risky due to the pandemic that is faced worldwide.
Assalamualaikum. My name is Nur Sahira binti Muhammad Arbi. My metric number is 050476. Today I want to present about two company that I choose in transportation and logistics. The first company that I choose is Lingkaran Transporter Holdings Berhad Malaysia, or we call it RAP. The another one is Nationwide Express Holdings Berhad Malaysia. Okay, now I will present about the first company, which is Lingkaran Transporter Holdings Berhad Malaysia, or we call it RAP. Company background. Lingkaran Transporter Sdn Berhad, or LITRAP, was incorporated on 28 July 1995. Constructed by Gamuda Irama for RM1.5 billion. The construction lasts for 28 months from August 1996 to December 1998, 6 months ahead of schedule. The operation of the tools commenced on 25 January 1999, with the concession period extended by 1 year until 2030. In 2007, due to the reversed toll rates, Lingkaran Transporter Holding Berhad is the highway concessionaries or Build Operator Transport (BOT) operator company in Malaysia. LITRAP is publicly listed on Bursa Malaysia and is significantly owned by Gamuda Group. The group has two major investments in companies involved in the design, construction, operation and maintenance of two major toll highways in the Klang Valley, namely Lebuh Raya Damansara Puchong (LDP) and Western Kuala Lumpur Traffic Dispersal Scheme Sprint Highway, together with the management of their tool operations. The main activities are to support activities for transportation, highway, street and bridge construction. LITRAP has achieved the ISO 9001-2000 certification since 2001. Lingkaran Transporter Holdings Berhad is engaged in the investment holding and the provision of management service to the subsidiaries. The activities of the subsidiaries are to design, construct, operate and maintain Lebuh Raya Damansara Puchong, the highway, and to manage its tools operation and investment holding. Lingkaran Transporter operators in two segments, highway and other. Highway includes tooling operation and highway maintenance. Other includes investment holding. The principal activities for Lingkaran Transporter Sdn Berhad is The principles of the subsidiaries are to design, construct, operate, and maintain Liberai Damansara Puchong (LDP) and to manage its toll operation and investment holding. The company operates through segments, including highway and others. The highway segment is engaged in tolling operation and highway maintenance. The other segment is engaged in investment holding. The company is engaged in construction work on the ground level of mass rapid transport and light rail transit extension projects along certain stretches of LDP and system penyuraian traffic KL Barat Holding Sendirian Berhad Sprint Highway. Its LDP and Sprint service include auxiliary police, traffic surveillance, control and lay-base and rest area. Its subsidiaries include Lingkaran Transkota Sendirian Berhad, Penyelenggaraan Litra Sendirian Berhad, Midawasa Sendirian Berhad, and ETC Link Sendirian Berhad. Okay, now we move on to the share price of Lingkaran Transkota Holdings Berhad Malaysia or Litra. As we can see in the share price graph, the graph shows that in January, the share price is half a little bit because when trading volumes are lower than average, such as during the summer holiday periods and around major holidays. Meanwhile, in February, the share price is went slightly. This might be the market was previously too bullish on the stock and has seen moderate expectation. While in March and April, the share price seemed to be dropped because the declining dividends has caused some investors to sell their shares, pushing the price lower in the process. Okay, now we move on to the risk analysis of Lingkaran Transkota Holding Berhad Malaysia or Litra. Despite the knock-on impact from the various stages of the Movement Control Order (MCO) amid the COVID-19 pandemic, the LDP's average daily traffic (ADT) has been restored to the almost pre-MCO levels. That said, the reinstatement of the conditional MCO on 14 October 2020 is likely to unravel the improvement achieved to the date. As such, our sensitivity analysis assumes that the highways traffic volume will decline between October and December 2020. The highways ADT shrank to 424,199 vehicles in March 2020 and 317,027 vehicles in March 2021. However, we derive some comfort from the strong recovery after the gradual easing of movement restriction. Although LDT lagged 75% at the height of the lockdown in April, the highways ADT was only 2.1% lower in September 2020. Despite the 2.4 YoY drop in revenue to Rm 503.8 billion in March 2020 and a further 26.8% fall in revenue to Rm 119.3 million in March 2021. Litra is envisaged to have a sufficient cash flow buffer to meet the Sukuk's financial obligation and maintain its debt coverage level. Its finance service cover ratio is envisaged to exceed 2 times under RAM stress analysis. Our sensitive scenario incorporates prudent traffic recovery and postpone of the LDP's traffic increase to 2022 and delay receipt of the compensation payment from the Government of Malaysia between 1 year to 1.5 years. We expect the Litra to remain prudent in its distribution to its shareholders, such that a minimum FSCR of at least 2 times is maintained through the sukuk's remaining tenure. The truck revenue remains partly dependent on compensation payments from the Government of Malaysia, which account for a third of the company's current revenue. Our stress analysis incorporate delays in the receipt of compensation. Even so, we believe the Government of Malaysia will continue to honor the compensation arrangement in the event of non-revision, although we do not preclude uncertainty in the timing of payment. Similar to other toll concessionaires, the truck is inherently exposed to regulatory and single project risk. Potential termination or expropriation of its concession remains an event risk. Under such circumstances, the Government of Malaysia will be obligated to pay the sukuk holders and the company as per the terms of the concession agreement. The second company that I choose is Nationwide Express Holdings Berhad, Malaysia. Okay, company background. Nationwide Express Courier Service Berhad was founded in 1985. Nationwide Express was one of the first few locally established companies in Malaysia. Nationwide Express has been ranked as the most preferred courier company in an independent survey carried out by Malaysian Communication and Multimedia Commission (MCMC). Nationwide Express has also been awarded the Best Malaysia Brand 2004 in the logistics category at the International Brand Consumer Fair (IBCOF) 2004. They were also successfully selected as the 2005 Super Brands of Malaysia and recently won the Brand Laureate 2006-2007 for being the best brand in courier logistics Malaysia. Nationwide Express main hub is located at its head office in Shah Alam, Selangor. They are handling over 50,000 packages per day, and with ongoing of facilities, and it may handle up to 70,000 pieces of packages daily. With over 118 locations, Nationwide Express has the most comprehensive and extensive. Nationwide Express Holdings Berhad, also a Malaysia-based investment holding company, which provide management services to Nationwide Express Group. The group is principally engaged in provisioning express courier service for mails and lightweight parcel both within Malaysia and overseas. The company offers freight forwarding, shipment tracking, special handling, and other services. Nationwide Express Holdings conducts its business in Malaysia. Nationwide Express Holdings Berhad operates in the courier services except by air sector. The principal activities for Nationwide Express Holdings Berhad, Malaysia. The principal activities of the group consist of providing express courier services, tracking services, freight forwarding services, customized logistics services, mailroom management services, and warehousing. Nationwide also provide speedy pickup and door-to-door delivery of time-sensitive documents and parcels mainly in Malaysia, Singapore, and Brunei. The company is also engaged in the provision of freight forwarding and logistics services through its wholly owned subsidiary, Nationwide Express Freight Forward Syndrome Berhad. The company was incorporated in 1985 and is based in Shah Alam, supported by more than 1,600 dedicated employees, 240 fleet of network mobiles, and 500 motorbike couriers. It meets the demand for door-to-door fast, efficient, and reliable service for speedy transfer of lightweight and high-value goods between locations. Now we move on to the Share price of Nationwide Express Holding Berhad, Malaysia. As we can see in the graph, if we look at the graph on Nationwide Express Holding Berhad, from the share price, you can see that in January, the share price is depreciate might cause of some serious doubt about the merits of the initial decision to buy the stock. Meanwhile, in February, the share price is grow slightly. This might be the companies without profit are expected to grow revenue every year and at a good clip. That's because it's hard to be confident a company will be sustainable if revenue growth is negligible and it never makes a profit. While in March and April, the share price seems to be plummet because the share price decline highlights the risk of investing in unprofitable companies. This business clearly needs to grow revenues if it is to perform as investors hope. Okay, now we go to the risk analysis of Nationwide Express Holding Berhad, Malaysia. The coronavirus pandemic is causing large-scale loss of life and severe human suffering globally. It is the largest public health crisis in living memory, which has also generated a major economic crisis. With a halt in production in affected countries, a collapse in consumption and confidence, and stock exchange responding negatively to heightened uncertainties. Economics forecast issued over April until June 2020 depict an increasingly negative outlook in terms of the scale of the global economic recession triggered by the pandemic. Nationwide Express Courier Service Berhad is lagging behind as a beneficiary of the growing e-commerce business. However, the courier service company is in the midst of the completing a slew of corporation exercise that will eventually see its listing status transferred to a new holding company. Following the internal restructuring, Nationwide Express Courier Service has proposed to acquire a new company, Airpark Express Sdn Berhad, which specializes in the e-commerce space of courier services. While the company has been in the red in the past four years, a turnaround with stronger earnings could be on the cards. Nationwide Express Courier Service Berhad has embarked on reviving its financial condition by boosting its business to consumer B2C channel along with several cost optimization and sales strategies. Its B2C business expansion strategies commenced last year in tandem with a spike in e-commerce business as a result of the COVID-19 pandemic and Movement Control Order MCO 2.0. Traditionally, 95% of Nationwide Express business came from the business-to-business channel, but in the recent months, its B2C business has grown tremendously as customers become acquainted with the use of digital and online platforms. To capitalize on such trend, the company in-house IT unit has enhanced its career application and B2C platform by enabling Nationwide Express customers to do live tracking updates. Apart from gaining a better analytical insight into improvement the level of its service, Nationwide Express had also embarked on the redesign of carrier bags for more than 350 of its motorbike courier. This will enable its dispatch rider to handle more volume while ensuring a more effective and secure delivery method to customers. That's all for me. Thank you.
050832. Today I will present you about two companies that I choose, which is Transocean Holdings Berhad and Trimode System M Berhad. Okay, first of all, for Transocean Holdings Berhad is a provider of logistic related activities. The company provides trucking services and cross-border trucking services for consolidation, cargo or loose truck load services from Malaysia, Singapore, Malaysia and Malaysia, Thailand, Malaysia. Its segment consists of logistics solutions that provide custom brokerage, warehousing, freight forwarding, tracking related service, international air and ocean freight service, trading of tires that manufacture and trade in tires, and investment holdings that provide management service and renting of properties. Majority of the revenue is derived from the provision of custom brokerage, warehousing, freight forwarding, tracking related service, international air and ocean freight services. As we can see the graph is from the data of share price for Trimode company from 31 December 2020 to 30 April 2021. The y-axis is the value of share price and x-axis is the month. The company can remain constant and slightly similar to their stock prices at the higher prices. This shows that company has good financial performance and can maintain their profit. For the Transocean Holdings, they having a market risk, which is the investment losing its value due to various economic events that can affect the entire market, which is pandemic COVID-19. The main types of the market risk include equity risk, which is the risk pertains to the investment in the shares. The market price of the shares is volatile and keep on increasing or decreasing based on various factors. Thus, equity risk is the drop in the market price of the share. Next, we move to another company, which is Trimode System M Berhad. Trimode was incorporated on 19 November 1991 and listed on Bursa Securities on 14 May 2008. The group has actively grown over the past 29 years, providing logistics services in Malaysia. The group is principally involved in the provision of the integrated logistics services, where they can carry out the provision of sea freight service, container haulage services, air freight service, freight forwarding service, warehousing service and marine insurance service, predominantly at the major transportation gateways in Peninsular Malaysia, namely Port Klang, Penang Port, Pasir Gudang Port, Port of Tanjung Pelepas, KLIA and Penang International Airport. They can also venture into logistic business in Vietnam via our associate company, which is Oriented Freight Services Vietnam, which commenced in operation in March 2019 and it's progressing in a positive trend. For the principal activity of Trimode System and Company, first of all is sea freight services. As part of their goal to offer integrated logistic convenience, Trimode Group has partnered with premier carriers to provide flexible FCL shipments to major ports worldwide and ensure availability of container, slot and priority loading. Even during the peak periods, with their global network of agents and representatives, they have one of the most comprehensive coverage around the world at competitive prices. Secondly is container haulage or trucking. They provide container haulage services for FCL deliveries. Their vehicle fleet. The second one is container haulage or trucking. They provide container haulage services for FCL deliveries. Their vehicle fleet consists of 99 pram movers, 517 trailers and 3 side loaders, and is well equipped with a GPS, a real-time delivery tracking system for operational efficiency. they are continually expanding to meet the growing demand of their efficiency craft industry. Next is air freight services. As they park service to offer integrated convenience, Trimer Group also conduct transportation arrangement for cargoes with their international air freight agents. Their extensive global coverage is competitively priced to offer affordable yet efficient routes. They also provide warehousing and transshipment service for all imports and export at open request, door delivery and ex-road pickup and drop-off. The last one is warehousing. As part of their effort in providing solution and enhancement of SCM supply chain management, they provide general warehousing services such as long-term storage, bulk shipment loading, packing container stuffing, lashing, cooking, and other logistic-related activities within the proximity of Port Klang terminus. This is a particularly cost-effective way for outstation factories to save on their transportation costs. As we can see the graph is from the data of share price for Trimer Company from 31 December 2020 to 30 April 2021. The y-axis is the value of share price and x-axis is the month. The company can remain constant and slightly similar to their stock prices at the higher prices. This shows that company has good financial performance and can maintain their profit. Next is a risk investment in Trimer System and Berhad, which is they having a liquidity risk, which is they are not able to sell the securities at a fair price and converting into cash. Due to less liquidity in the market, the investor might have sell the securities at a much lower price, thus losing the value. This is because they are having at the slightly same of their share price